Joined by Colin Cieszynski, Chief Market Strategist at SIA Wealth Management. Retail sales, obviously an important indicator. What is your feeling about the consumer on both sides of the border?
I think consumers are really cautious right now, and it's interesting, the article that was just running before this said people are hard-nosed for bargains, and I think it's very clear that we saw from the earnings that U.S. retailers were putting out over the last week, and I looked particularly at Best Buy on Tuesday, where they had negative same-store sales, cut their guidance, cut their sales guidance and their earnings guidance. So it seems as though people, with the exception of possibly going out for big sales, are not looking at high-ticket items. The only retailers that have done well at all in the latest round of U.S. retail numbers were clothing retailers, people like the Gap. Otherwise, we've seen Walmart didn't do well, the traditional discounters didn't do well, the home improvement retailers didn't do well. People really aren't spending. I think consumers are really getting squeezed between higher food costs, higher gas costs, higher interest costs, higher cost of everything is really put a squeeze on everybody. And because of that, I think the people that are willing to shop are really looking for big deals.
That's interesting. Maybe we could put up a 10-year chart for Gap, because it has struggled in recent years, but it did. Its latest quarterly results delighted investors. GPS, I think is the symbol.
Absolutely. And I think it's possible that the clothing retailers have struggled for much of this year. And it's possible that we might be in a situation where expectations for them were so low and so depressed that we're getting these pops off of really low levels because people, the sentiment towards them was so despondent, and now we're seeing a bit of bargain hunting and short covering in their stocks just because expectations were so low.
We've heard endlessly, of course, that the dollar stores, the discount retailers are the way to go, but Dollar General, DG, has been a real disappointment this year.
Absolutely. They haven't done well either, and they've really struggled, and it just seems indicative to me that the consumers' budgets are getting eaten up by certain core things, and people don't really have the money to spend on other things.
The U.S. job market certainly has not turned down, but it's been showing some signs of weakness, and that's got to be weighing on consumers as well.
You would think so, just on the fact that it's been very strong for quite a bit of time, but as things start to slow down and people get squeezed, people start to get worried.
Are you overweight generally consumer-related stocks in Canada? I know there isn't always a great selection.
It's hard in Canada because there just aren't very many of them to begin with. But at the moment at SIA Wealth, we've actually been building cash in a lot of our portfolios for over the last couple of months. A lot of our shorter-term indicators turned bearish towards the end of September and remained bearish through October, and even it's still been dicey even into November, even with the bounce that we've had in the market. The overall capital flows out there have not been that strong. It still feels like, in a lot of ways, like it's been a short covering rally more than anything.
We'll get more of your broad strategy in a bit. Let me give you a gripe I have with retailers. They make you line up at the cash register, at the checkout. But Apple, for years, has had their people walking around with these little portable cash machines, and apparently Sephora is doing that. Why aren't all retailers doing that?
Honestly, I don't know, but it's amazing. Whenever I walk through any mall, by far the Apple store is the busiest, has the most traffic, the most people in it. It's quite incredible, really.
They just have this cult they just managed to, in some way, create a mystique.
It's incredible, and it's them, because I do remember when we had the Microsoft stores up here.
Yes.
They were nothing like Apple. No. Even then, you'd walk in there and you'd see the tumbleweeds going down the aisles.
That's right. I remember there was one in the Eaton Centre here in Toronto, and it was never busy compared to the Apple store anyway.
Absolutely.
We're looking forward to having you on the show. Thanks for joining us, Colin. Colin Cieszynski is our featured guest today. He's Chief Market Strategist at SIA Wealth Management.